On this particular segment of our Market Day Report, we're going to be taking a look at your grain and livestock market action with some help with Jim McCormick. He's on the line right now from Allendale. So let's go there right now. And Jim, thank you for joining us today as we examine our early trade here in the grain markets. Can you take anything away from the action you've seen so far here in the grain trade?
Well, right now, it looks like just as we're closing the week out right now, the bulls are throwing in the towel a little bit. We're seeing pressure across the board. We've got some drier weather coming in across the Midwest, and I think they're also bracing for what should be a bearish report coming up on Tuesday, and that's putting a little bit of pressure across all the screens.
And it seems like we just got done with a major USDA report. Now that, of course, was the prospective plantings report and that quarterly grain stocks report. So those don't come out very often, that's for sure. But now we're back to our regular monthly routine of the crop production and the supply and demand reports coming out, as you mentioned, on Tuesday. What kind of numbers are you going to be keying in on this time around?
Well, what makes this one, Marlon, is a very, very big report, because what they do is they take the numbers they got at the last day of the acreage numbers and the quarterly stocks, and build them into and make revisions for this report out on Tuesday. And what we found is they found more corn and more wheat and more beans in inventory than what the trade had anticipated. So what that in turn is, we're looking for the carryouts to grow on all three commodities. We're looking for the wheat carryout to go from roughly $1,130,000,000 to $1,145,000,000. Looking for corn carryout to go from 2.32 billion bushels to 2.35 billion bushels, and bean carryout to jump from 435 million bushels back up to about 445 million bushels. So that's kind of what they're bracing for. And then the other part of the report that's really we get our first shot look at what the government's thinking for the 2017-18 crop year, because they're going to take the acreage numbers they got on the 31st and build their first guesstimate of what they think production is going to be, demand is going to be, and what kind of ending stocks we could end up with a year from now.
What do you think would have more impact, a change in the weather or a surprise in that report?
I think the change in the weather will be the biggest impact right now. We're dialing in a bearish report today. They're anticipating it. I think the real key is, once we get this report, it almost is like the starting gun goes off, and I think the trade really starts focusing in on, are we going to get this crop in on time? And that'll have a big impact. What we found historically, if we get the corn crop in on a timely basis, we tend to pick up acres from what we think. Now, if the corn crop stumbles and the weather's kind of cool and wet, it just increases the potential of less corn acres and more bean acres, which is really what we do not need. With the carryout we got this year and the monster crop coming out of Brazil, additional bean acres are the last thing the world needs at this time. Right
now, May corn down 2.5 at 358 1/4 per bushel. We have December down 2 1/4 at 383 3/4. On that soybean side that you were talking about on the May contract, we're now at 940 1/4, down 1 1/4, and November down 3 at 947 3/4. Jim, a lot of folks have been watching that 940 area for a key level of support. Got down as low as 937.5 in the early trade today. How dangerous is this here?
Well, I think it is pretty dangerous. You'd never like to see on a chart trade to close on the week's low, taking out last week's lows and new lows for the move on a Friday. We'd like to see a nice recovery bounce back late in the day, but like I said, chart-wise, that's critical, and a close below it was definitely negative.
Okay, let's look at the wheat trade. And in Chicago wheat, we have May down 1.5 at 421 3/4. July down a couple of cents. Kansas City wheat, we have the May contract 1 1/4 lower at 418 3/4. July down 1 3/4. So if nothing else, we're consistent in our losses today. Looking at the Minneapolis wheat trade, we have the May contract down 2 at 519 3/4. Had actually been a little bit firmer in the open. On the cotton market right now, we have our July contract down 41 points at 75.99. So general bearishness about everywhere you look today. Jim, I'll bring you back in a moment, and we'll talk about our livestock market action as well when we come back right after these messages. Let's go back to our conversation with Jim McCormick of Allendale Incorporated, and he's based, of course, in McHenry, Illinois. We're going to be talking about livestock in a moment, but Jim, in the meantime, just wanted to get your thought. If you look out the window from where you are right now or in your neighborhood as you go to work, how far do you think it's going to be, or how far off do you think it's going to be before the farmers can get in the fields and maybe start planting in that area there?
Well, here in northern Illinois, it's going to be at least a good week is what we're hearing. But we've had a lot of rain over the last week, 10 days. I can tell you my sump pump continues to run even 2 days after the rain stops. So there's still water in the field. So early estimates are this upcoming weekend or next weekend at the earliest, and maybe a few days after that.
It's going to be a long time before we have to worry about subsoil moisture conditions in the central Corn Belt, huh?
That's it, yeah. I mean, we're actually setting ourselves up for a phenomenal yield in the very big picture. I mean, we're encouraging farmers to use rallies to sell because the odds of a severe weather problem, dryness issue look limited just with the profile going into this planting year.
Let's take a look at our livestock sector here and see how the live cattle and feeder cattle are opening up here this morning. Right now on the live cattle board, now we're showing a little bit of firmness here. We bounced off our earlier lows. April live cattle up 58. Your more active June contract now quoted at 111 even per hundredweight. That's up 88 cents on the day. It dipped down below 110 there for a little bit this morning. So we bounced about almost $1 and a dime off of that now. August up 80 at 107.18. On the other hand, we look at the feeder cattle, and right now you have them showing triple-digit gains. April up $1.05. Your May contract now $1 higher at 133.18 per hundredweight. In the August up $1.10 at 134.80. Seemed like kind of a timid start to the market, but they're really starting to, as they say, get their legs back under them again today.
Yeah, we're seeing a pretty good bump in it right now. We haven't traded cash cattle for the most part this week, so I think there's some optimism. Maybe we'll trade a little bit higher with the nicer weather coming in, maybe psychologically get people a little bit excited about going out and grilling. Also, a little bit of hangover from yesterday. Weekly export sales were the highest in 10 weeks. So, we're moving this product, and the funds continue to like owning cattle. They've been long for a while, and, we're looking for them probably to build to that position when the CFTC reports out after the close.
But this is a real tug of war going on right now, right? Because here you have a cash cattle market that seems to be hanging in there relatively close to where it was. But on the other hand, you have the wholesale beef trade just really sagging, and it was down again yesterday afternoon.
Yeah, I mean, it was down again right now, and that's where the battle is right now. And that's what's making this trade so hard, because you're trading the box pieces drop, and the cash price is trying to hang in there on the cattle, but the futures are trading at such a massive discount to the cash. It's going to keep more of a choppy trading action is what we're kind of anticipating over the next couple of weeks until maybe all this gets a little bit better in line. There was some box beef support right around this 208 to 210 level. If we take that out, the next level is going to be somewhere around that 198 to 202 level for the box beef. That'd be the next chunk of support we'd look for. Choice
cuts were down $1.81 yesterday afternoon. On the lean hog trade right now on the futures, here we go with a look at the May contract, down 35 now at 69.20. But it is on the high of the day. And we have June down 85 at 72.85, now 72.90. So we'll be watching these lower trend right now in the lean hog trade. Jim, thank you so much for joining us today. Appreciate it. Hope you have a great weekend.
Thank you. You do the same.
Jim McCormick of Allendale and McHenry, Illinois. So they're off and running, firming up in the cattle. The hogs kind of sagging so far.
So far. The day is
early.
Still young. That's right. Thank you so much, Markets Editor Marlon Boland.